Hello traders, and welcome to my video on the Z-score indicator trading strategy. In this video I'm going to show you a simple strategy that you can use to capture moves like this one for over 600 pips and counting. Okay, you can use this strategy on any trading instrument, so Forex, cryptos, commodities, stocks, indices, etc., and any chart time frame. I'm using a euro dollar 1 hour chart here. I prefer the higher chart time frame simply because they contain more price data, and therefore I find the signals tend to be more reliable. You can see I have the Z-score indicator here below my chart. If you search for it online, you can find it for your platform. I'm using the MT4 MT4 platform here. Okay, so the first thing we're going to look for is a trend. Clear as day. Support and resistance is what we're going to mark. So we've got, if we just hone in, we were around here somewhere. This is what we would have been looking at. We can see this triple top formation here. Okay, resistance tested at least 3 times around this area. So you got your test here, and test there. Then price started to fall. This area of support. In fact, we did have earlier support. If you just look at this level here, okay, there was a breakout there, a little pullback, a breakout of this support here, which then became resistance here. This is, as I said, it's the 1 hour chart. So there's plenty of price data within these candlesticks. You can draw accurate conclusions from them. Markets making lower highs. All the signals are there that we're in a downwards trend, or we're at least the start of one. Okay, then you've got this line of support. This is the key line probably here. If we go back, you can see this is a strong level of support. And just remove this line for you. We've got this level of support. Once that's breached, and then we come into this level of support, that's breached as well. Plenty of momentum here for the downwards trend. So you could have entered in either of these breakouts if you hadn't have taken the more aggressive trade up here. Okay, and if we zoom out, you would have been into a trend for over 600 pips. Stop loss I would have placed above the high, so around 10 to 15 pips. Just zoom in and show you. So we take this breakout here, stop loss above the high, you're only looking 10 to 15 pips, so really tight stop loss for the 1 hour chart time frame. As price fell, I would have moved the stop loss to break even, and then just as price continues to fall, move the stop loss above the recent highs just to lock in the profit. Recent high, recent high, recent high, recent high, recent high. Lock in the profit as much as possible on the way down. So basically, I'd like to cut losing trades short. If we're wrong, we get out and we wait for the next opportunity, but let winning trades run. Okay, I wouldn't use a fixed take profit. I wouldn't want, to have the 15 pip stop loss. Price falls down to here. Okay, 70 odd pips, still a good trade, but we exit there, we just leave way too much on the table. Instead, if we're patient and we trade long-term charts, we can capture big moves like these for hundreds of pips. That way, even if we take a few losses, 20 pips here, 15 pips there, we can afford to take those losses because we know eventually when we do hit a big trend like this, we're going to make them back and a lot more on top as well. Okay, that's another advantage, in my opinion, to trade in longer term chart timeframes compared to, say, scalping the 1 minute and 5 minute charts where you've got usually a poor risk to reward ratio, like trying to scalp 5 pips with a 10 pip stop loss, for example. Just makes life more difficult for yourself. You pay more in broker fees, spreads, commissions, and also a lot of time chart watching, trading longer term chart time frames. We can trade smart, not hard. Okay, I've waffled on a lot. The Z-score indicator, let's get to it. So here it is down here. Basically, there's a few things we're going to look for. When it's up in this area here, we're going to say the market could be overbought, so we can look for a reversal to the downside, just as if it's down below in this oversold area here, we can look for a move to the upside. Okay, you want the lines crossing in the direction you're going to trade, similar to a stochastic oscillator, okay? And red for a sell, blue for a buy, okay? And you can also look for divergence. So basically, if the indicator is making lower highs like this, you can say that the market is falling down, just as if it's making higher lows, that the market is going to be moving up. Higher lows, market moving up. Lower highs, market moving down. So that's an aspect to look for. What I'm not going to do is I would not trade every single crossover. Granted, you will get good trades like this crossover here in this extremely overbought zone. Would have been a perfect way to enter in this trend early. However, if you go back, there was a crossover here, which would have been not so perfect. Okay, so it doesn't work every single time, just as you wouldn't be, I wouldn't take buy trades in when I can see there's a downwards trend. Okay, so for example, if you think about buying in this oversold or buying in this oversold area, even buying in this oversold area, you can just look at the chart and say, well, that's not a good idea because the lower highs in the market's falling, so I'm going to ignore the buy signals. But what I will do is I will look for the sell signals. Okay, so once you establish your trend, you can take the breakout trades, completely different to the Z-score indicator, but we could have taken it anyway. Interestingly, the Z-score indicator did cross over, which could have been taken as a sell signal as well. And you can wait for a pullback. Okay, so pullback in the opposite direction, and then a crossover of the Z-score indicator. That ties in nicely with the bearish divergence. Could have timed your entry there. Okay, on the crossover, which in fact coincides nicely as well with a breakout of that level of support. Another opportunity to get into the trend there. Nice M pattern formation. Lots of bearish price action going on in there as well. You've got a bearish hanging man, for example, in bearish inverted hammer. Not to mention up here, you've got 3 inside down candlestick pattern, a 3 inside down candlestick pattern there. I do have videos on various candlestick patterns. If you're to watch anything on my channel, I suggest trend trading and price action. I think they're the most powerful things. You don't necessarily need indicators. Just good money management. You can have as well the best entry criteria in the world. If you've got poor money management and poor trading discipline and out of control emotions, you're just not gonna be successful in the long term, in my humble opinion. Don't let fear, anger, and greed cloud your judgment. Don't revenge trade. Don't overtrade. Okay. There's plenty of opportunity. As I said, you can use any trading instrument and chart time frame, and just have good money management. With the best entry in the world, if you've got a poor risk to reward ratio, then you're just going to end up chasing your tail. So back again, you can wait for a pullback. Nice big pullback here on the indicator. You see that even better because it's approaching this overbought zone, which is fantastic. And then we want to cross down, and that's exactly what we get. Ties in nicely as well. Almost a carbon copy of the previous trade that we took. Not to mention lower highs, nice wedge formation there, and a breakout. That's an NFP non-farms payroll first Friday of the month candle there. Could have used the momentum from the NFP release to just hop in on this trend. Okay, and then as this Z-score gets higher, we do the same, wait for crossover. Again, just showing the disadvantage of taking the crossover as it is. If you took it there, you're taking it at the low after this move. You want to wait for a pullback. Proper one up here. Okay, and then you could have taken that cross. That's the aggressive entry. Perhaps what I would have done is I would have been looking at this level of support. Just zoom in for you there. You can see this level of support was holding up well, but once it was breached with that significant candle, then became resistance. No coincidences, and a nice continuation of the trend there. We could have entered there. You also had bearish hanging man pattern there. Okay, and a 3 black crows pattern. Lots of signs. In fact, even just a basic support line in there, we can see that. Hey, look at that. Support, 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 breakout. Support becomes resistance. You could have traded the breakout of the support or the pullback to resistance. Don't need no unicorn crystal ball indicators for that, do we? Nope. Just good money management, good price action analysis. Okay, so again, you wait for a pullback, and then a crossover. Ideally one up here somewhere, as I said, so take this one up here. You see that crossover there. In line with the trend. It's not a bad trade. We need to be cautious that we've already had quite a move down, so you don't want to sell too low. Don't sell low and buy high, obviously. You can always just protect yourself with that support line for extra confirmation, and it's open to interpretation how you draw a support. Some may draw it like that, some may draw it like that. Either way, principle's the same. If we zoom in, we can see nice breakout, support becomes resistance, continuation. Okay, so you'll find these trades all the way down when there's strong trends. Breakout, support becomes resistance. Okay, ample opportunity. Just don't sell too low. And again, as I said, the crossover is not always reliable. There is a crossover here in the overbought, in a downtrend. However, the market's moving up, which is why I like to wait for a breakout of a support level, something like this one here. market's making these lower highs. Nice wedge formation, a breakout to the downside there. Okay, but each to their own. Again, the trend continues down here. Same principle. The more obvious it is, the better they usually pan out. Like this is a pretty clear one, isn't it? Got your bearish price action, lower highs, big move downwards, pullback and a breakout. Okay. And in fact, the breakout again is near enough by the cross there. Same scenario here. Okay. Cross, breakout, and here. Cross, breakout. So, ample opportunity, as you can see, to enter. Simple strategy, any instrument, any time frame. In a bearish market, again, no wizard indicators needed. Just draw your trend lines. Market's moving up. We can all see that. What are we going to do? We're going to wait for a pullback. There's a pullback. Breakout candle, no coincidence. Big breakout candle, pullback. Breakout candle, no coincidence. Pullback. Breakout candle, no coincidence. Guess what? Pullback, breakout candle, no coincidence. Okay? Happens all the time. And you can use the Z-score for the confirmation if you want on the crossover there, crossover there, crossover there, crossover there. That would have actually got you in earlier, that crossover. But as I said, there will be instances where price will just continue to go in the opposite direction. It's just up to you if you want the confirmation with the breakout support or resistance. There's actually a trade earlier down here as well. You can see that the market, lower highs. Okay, crossover here. And there's breakout to the upside. In fact, there was a crossover there slightly earlier, even down here as well. But as I said, there'll be instances like this crossover here where it won't quite pan out, which is why I like to keep an eye on the resistance levels, especially a resistance level like that. Pretty solid. Okay. So hopefully you found something useful in this video that you can apply in your trading strategy, whether that's just trading with the trend, the money management aspect I was talking about, the discipline, the emotions, the longer term chart time frames, giving more reliable signals, trading smart, not hard. Yeah, just keep practice on a demo account. Yeah, and hopefully you too can create a winning trading strategy that is suitable for your style. Let me just one thing before I forget. You see, with this uptrend, don't forget as well what I was mentioning about the divergence. So we had bullish divergence here, okay, higher lows, and coincided nicely with the market moving upwards there. Thanks for watching. Please like and subscribe if you found something useful in this video, and I hope to catch you on the next one. Take care.